Swing Alpha Trade Report for February 14th, 2018. First, we'll go over SPY. You can see that we're still within a correction right here. If you look at the general size of the correction, you can see that it compares to previous corrections that we've had. So this is probably going to be the end of the correction. I'm pretty sure that around 252, 253 was the bottom. But like other corrections, you could expect possibly a 1 month period before we finally get that move up. I don't think it's going to be like the October correction where it just immediately bounced up. I think it's going to be somewhat similar to 2015 or early 2016 right here. Now, if we look closer, you can see this is quite large moves in each day. We do expect it to come back down, possibly around 260, before we get that final boost, the final bounce up. Now, if we go to 30-minute candles, it'll be a little more obvious. So we're going to load up 30-minute candles, and I've already pre-drawn in what could happen. So I wouldn't be surprised if we did get a little bit more of a push into tomorrow, and then finally rolling over and some decent-sized sell-off again. I'll have one more panic sell-off, and then this will be the perfect opportunity to buy. Right now, we are adding on longs almost every day. Probably about one position per day we'll be adding. So even though the market is still bottoming out, this is a good time to start buying the dip for the final push up. So if we do have some positions and the market does sell off, we could expect to lose a little on those positions in the short term. However, don't be worried. We do expect that this is the bottom here and it should continue up from this point on. Now, we've taken 3 trades on yesterday. We always delay our videos by a day or two, so alpha level members have time to get in, and the move has some time to actually go up or down for short. So the first trade is W. This was alpha level members only. Alpha level members were alerted to go long yesterday on this candle right here. As you can see, we had a bull flag here and it immediately went up, and then this is another bull flag. So we're hoping that history does repeat, and we're expecting it to continue up again. Next trade was QURE, Q-U-R-E, also for alpha level members only. Now, QURE had been going up for quite some time already, and you can see that there was a decent sized resistance at 21 here. Had 1, 2, 3 taps, and then the 4th tap just broke through, and it seemed to be holding pretty well. So yesterday we issued an alert for alpha level members to go long, and it appears to be working out pretty well so far as well, up 10% on the day actually. And then the last one, YRCW, is a trade of the week. So all members were alerted to go long on YRCW. So YRCW is not our normal trade. This is more of a rubber band trade. We believe it is oversold. It's panic sold here. And if you go back to the history of YRCW, you can see this happens often. You have this panic sell, and then immediately recovers, panic sell, recovers, another panic sell, recovers, and then finally we expect history to repeat. This is going to be a panic and then recovers. Now, it's not a 100% chance that this is the bottom. It could actually make a lower low. If we do stop out and then the trade looks like it's going to work out again, we'll just re-enter it in within a few days. So all of our trades, we play in the hole for several months. We are buying the dip, and this dip will rocket up. When it's ready, it should rocket up, and it should hit some new all-time highs again. So we're expecting to hold all these trades between 1 and 3 months, most likely. Like, for example, if you look at YRCW, you can see this one, it took about 3 months for it to peak out here. This one was about a month and a half. This one was about 2 months before it peaked out as well. So just keep an eye out for new alerts. If you're not already a Swing Alpha member, we definitely recommend signing up. We'll issue an alert. For right now, we'll be issuing an alert about once a day to load up for this dip for the next round of all-time highs in the market.